Hi, I'm Jack and I'm a mortgage advisor at the Mortgage Hut. If you're curious about how much you could borrow on a self-employed mortgage or whether you'll get approved at all, know that we've helped hundreds of people secure the mortgage they need to buy a home, and that includes people with a year's worth of accounts. There aren't specific mortgages for self-employed workers, contractors or freelancers, but there are lenders that are more likely to approve a mortgage for a borrower with an income that can be deemed as fluctuating, unpredictable, unstable or risky. Being your own boss leaves you at the mercy of your hard work and determination, but outside factors such as illness or the economy can impact your ability to earn consistently if you're self-employed, though of course there will always be exceptions to this rule. It may be the case that you have a contract in place or perhaps several contracts in place for the future, and if so, this may work in your favour. Proof of future work can help alleviate some of the concerns from lenders about your ability to repay your mortgage in some circumstances. Though your own ability to find a mortgage as a self-employed worker will depend on a range of factors, including your annual gross income, the total cost of your outgoings including debt repayments, how much you want to borrow, the size of your deposit, the length of time you want to repay your mortgage over, age, how close you are to retirement and potential dip in income, the type of property you want to buy, and your credit score. After some eligibility check to ensure you meet your chosen lender's mortgage criteria, you may gain a mortgage in principle, also known as a mortgage promise or a decision in principle. Having this before you start your search for a property to purchase can help you, as you'll know how much you're likely to get accepted on a mortgage and therefore what your maximum budget is. When you've found your ideal property and you're ready to make an offer, you'll need to apply for a mortgage to finance the purchase. You might have to pay a booking fee to reserve the mortgage product you want, but your mortgage broker will let you know about the associated fees with the mortgage you've chosen, and if you decide to take the advice of a professional. The self-employed mortgage product you opt for will have terms and conditions which affect how much interest you pay and over what period, so it's important to find an agreement that works for you and your situation. To get a good deal, you need to compare your options, and while your choices as a self-employed borrower may be slimmed down, there's still a lot of terms and conditions to read and a lot of mortgage repayment calculations. Niche self-employed mortgages aren't always available with high street banks or lenders, and the process itself can be tedious, to say the least, especially if you're unsure of where to start your search and what constitutes a good deal. Working with a mortgage broker who has access to a wide range of UK lenders is a good place to start, because they can quickly, yet effectively, use their network of lenders to compare interest rates and the other pros and cons for you to consider. A good mortgage broker knows the typical eligibility factors that lenders look for and will never recommend a mortgage lender that is likely to reject you. We always check the eligibility of the people we help before we shortlist lenders to recommend, because it's the information we learn about you that is so crucial in guiding the search for mortgage lenders. It's not necessarily harder to get a mortgage if you're a contractor or freelancer, it's just that the choice of lenders is likely to be lower. Not all lenders are willing to lend to a borrower who isn't in full-time employment, so with fewer lenders to choose from, the amount you're charged for a mortgage can sometimes be a little higher. No matter what your situation, don't panic. Low income, bad credit, irregular pay are just common issues on applications for self-employed mortgages, and there are mortgage brokers who specifically negotiate and oversee mortgages for people with similar circumstances all the time. Many of these issues seem like a huge hurdle, but they can be overcome with some forward thinking, smart financial planning and good advice. If you currently take minimal income for tax purposes, or your wealth is such that you take a tax-free allowance from the business, you'll need to find a lender with experience and knowledge of complex income structures. At the Mortgage Hut, we've developed relationships with specialist lenders who are sympathetic to the challenges you face in finding a mortgage as a self-employed worker. If you're self-employed, the way you receive your income is probably different from that of an employed person on the payroll. The way you get paid depends on how you trade and whether you're a sole trader, partner in business, or a limited company director. If you're a sole trader, lenders will likely look at your net profit and your total income received via your SA 302. Your accounts need to be completed by a chartered accountant and ideally cover a 2 to 3 year period, but don't worry if yours are less. There are mortgage providers who are happy to base your application on 12 months accounts and others who may be happy to consider future projections. If you're a partner in a business, the majority of self-employed mortgage lenders will assess your income by looking at your share of net profit as well as your share of total income received, if you're using your SA 302s. However, if you pay yourself a basic income plus a profit share or bonus, ensure that any mortgage lender takes all your income into consideration, including any profits you choose to retain in the business. If you're a limited company owner or director, you're technically employed by the company you've created or helped build. The majority of lenders will look at your director's salary and may also include your share of dividends. Lenders each have their criteria and will therefore have different degrees of flexibility when it comes to income and what can be included as part of your income assessment. Very occasionally, lenders can consider net profit if a sum earned was left in the business and not withdrawn, and this can help some applicants borrow a large amount on their mortgage. Speak to a broker who specialises in mortgage for self-employed borrowers to find these lenders, as often they're not available on the high street. To apply for a mortgage as a self-employed worker, you'll need your ID with current address if you're using your driving licence, proof of address in the form of a utility bill or council tax bill, proof of income including your P60s, SA 302s and company accounts, 3 months of bank statements from all relevant business and personal accounts, deposit, usually shown by a statement of funds held, and your life insurance document. While it's true that a lot of mortgage lenders prefer customers to be in full-time employment, there are great deals to be had for contractor and freelancer mortgages. It's all about finding a lender with mortgage criteria that matches your circumstances. There are also some things that you can do to improve your affordability as a self-employed applicant, to help prepare and present your application in the best light. Self-employed workers can present a risk to lenders and banks because of the unpredictable nature of their income, so regular payments that don't fluctuate can suggest stability. Having a chartered accountant manage your books can help too, and although it may be possible to find a self-employed mortgage lender if you have just a year's accounts, many lenders will have criteria that ask for 2 years of fully audited accounts. Your trading history of more than 2 years gives you proof of a good track record of work and can suggest to lenders that you're capable of earning a regular and sufficient income to afford mortgage repayments, though your other circumstances, like your level of debt and general credit history, will affect this too. Lenders will look at your credit score as part of their assessment of your affordability, so it can be a good idea to keep up on top of your credit score with each of the main credit reference agencies out there. You've probably heard of Experian, Crediva or ClearScore, but there's also Check My File, which can be handy for an in-depth look at your credit history across each of the main credit reference agencies in the UK. Plus, it just means remembering one password rather than having to set up multiple accounts. Improving your credit score can help you access a wider range of mortgage lenders, as your score reflects your money management skills and general ability to repay credit agreements. Keep on top of your credit score and any issues that arise or remain on your reports. Remember, you can contact credit providers directly to appeal any credit issues that you think are resolved or incorrect. Whether you're able to save a deposit or receive a gifted sum from a parent or close relative, having a larger deposit can help self-employed workers access mortgage lenders who otherwise might not lend to them. That's because the higher the deposit, the lower loan-to-value ratio. That's a percentage of the market value of the property you're borrowing from the lender. So if you were buying a house worth 200,000 and you had £20,000 as a deposit, that would be a 10% deposit. So the lender would lend you 90% of the property's market value. If you had a £30,000 deposit, 15%, your loan to value ratio would be 85%, and you might find that you have access to more lenders with better interest rates. A broker's job is to make the mortgage process as smooth as possible for you. It's a complete service delivered from capable, real people who know where to look for the best self-employed mortgage deals, but more importantly, they deliver this help without judgment and with the sole intention of finding you an affordable deal.